Happy Saturday. Hopefully everyone is enjoying the weekend. I am actually really not. Oh man, my sinuses are killing me right now. Actually sipping on some peppermint tea. So peppermint tea cheers. Hold on. Oh boy, like I said, hopefully everyone's doing well. The weather where I'm currently at is fluctuating like crazy. Just like the stock market, right? Okay, so if you are a new viewer, welcome so much. If you could do me a favor, and returning viewers could do the same, please take one moment of your time and like this video, only if you find value. If you don't find value, hey, don't give me a thumbs up, because obviously I'm not filling your day with any good information. If you want to see more of me, definitely subscribe to this YouTube channel. This YouTube channel is fairly new. I run other gaming, video game channels on YouTube. My main YouTube channel, Nightmare RH, has over 200,000 subscribers. I have yet to advertise this on YouTube. So any viewers on here are pretty much stock-related gurus, pretty much like myself, right? Okay, so today's topic is going to be about going all in, and also when might be the time to theoretically go all in. If you've been in the market, you've probably heard this term. I remember when I got back in the market, when I got into the market in 2020 during Rona, I heard the terminology. That was actually the first thing that I heard was, hey, this is a massive buying opportunity. You know, people are going all in. So what is going all in essentially means? Well, going all in could mean a variety of things, such as you literally clicking a buy button with all of your capital at once. So you're not nibbling on in, you're not trading on in, essentially. You're not building a position. You're just basically pretty much saying, hey, you know, these stocks on the screen that I'm showing and comparing, which I'm going to get to momentarily, just on a 3-month basis, they are down so much. I'm just going to take X amount of dollars here. I'm going to take X amount of dollars there. I'm going to take X amount of dollars there. And I'm just going to buy it. And that's it. Well, guess what? That's what I did during 2020 with a little bit over 100K of cash. And I got friggin' lucky. That's the only explanation that I could really get. Because the majority of times when people just execute a single large transaction, there's a lot of volatility that happens, such as, hey, maybe you didn't catch the bottom and maybe the bottom is still bottoming. So you might buy in and, hey, you know, maybe in a month or two, you might be down by 20%. Maybe if you had bought in instead of using a one-time buy of, let's say, $10,000, keep it simple, you basically do a one-time buy of $3,000. Or maybe 4,000. Go in 40% of a position size. And then you nibble on in. Warren Buffett, he nibbles on in and he also nibbles on out. Every single well-known billionaire, 9-fig, 8-fig, upper 8-fig, lower 8-fig, 7-fig, even upper 6-fig people, that's what they do. You nibble on in, you nibble on the way out. Okay? What happened for me during 2020 and 21 is that I took a little over 6 figures and I turned it into multiple 6 figures, and I didn't really know what I was doing. I didn't know about TradingView. I didn't know about moving averages. I didn't even know how to calculate fundamental analysis, just understanding like price to earning ratios. But I saw a generational buying opportunity and I took it. Okay? Could I have made a lot more money if I knew what I was doing? Oh, absolutely. 100%. But there were some positions that I had in 2020, and all I did was buy the Rona dip, buy the Rona stocks, the cruise lines, the airlines, a couple cosmetic companies, SoFi. I remember that I ended up getting a 300% return on. Viacom, CBS, I don't even think they're on I think they did a merger or something. I ended up getting a gigantic return on that one because they had a massive short squeeze. I was not in it for a short squeeze, but it ended up happening with a merger, which is just a unbelievable lucky situation. 2022, that's when I got challenged Because in 2022, I walked away still very profitable, but not as profitable as 20 and 21. And then 2023, I got my bum handed to me. I was in the red because I was very much in the wrong sector of the market, and I learned the hard way. 2024 came out of the red. 2025 last year was a better year of 2024, and I can already tell that this year is going to be a banger. But what I did last year on Liberation Day was something very interesting because a lot of people tend not to really do this. A lot of people will go all in really, really early, or they won't buy the dip because they're scared. If you're in the stock market, you got to come to the consensus of buying the fear, buying the blood, buying the dip. If you're a long-term shareholder of a company like I am of SoFi, AMD, and honestly, Hood, I'm really loving, especially how I'm seeing that Hood is just moving with Bitcoin, which means when Bitcoin's going to start trending higher, Hood is going to go back. So I'm very much long on stock, and I also am very much a short-term trader on some too. But at the same time, if you're a long-term trader, you buy the fear, you buy the blood, and you pick up discounted shares for the future. If you are trading stocks, you buy the dip, you sell the rip. It's a very simple terminology. Liberation Day last year, I bought over $100,000 worth of hard stock. Don't trade on margin. I honestly believe it's bad juju. I kind of think of margin as kind of like credit card debt in a way. That's me. If you trade on margin, hey, you do you. Just be safe, brother or sister. But I ended up buying companies. I ended up buying Nvidia below 100, AMD, which I still have those AMD shares below 100. Palantir on 2 different accounts. Meta, few other companies as well. And I bought all the way down. Even when we started to go a little bit up, I was still buying. And then I started buying again when we started going down on this fake, on this. A lot of people said, hey, we're going to retest for this bottom. Dead friggin' wrong. We went up and then boom, bought all the way down. And then as you come up, you buy the entire V. Like I said, keep it simple here. You got $10,000, okay? You start buying positions. 1,000, 1,000, 1,000, 1,000, maybe 500, okay, maybe another 1,000. Now we're going back up. 500, maybe 1,000, maybe another 500, maybe 250, maybe 250. You buy all the way down and you buy all the way up. You make money. Because as you're buying on the way down, and even as you're buying on the way up, you're getting a discount of what the market used to be before the entire sell-off. And last summer, we saw it happening. Now, I ended up selling out of these positions minus SoFi. SoFi I'm still holding, and also AMD shares as well too. But I ended up selling out of my positions during early summer, actually right after my birthday, June 25th. I sold relatively too soon. Hold on. Peppermint tea, cheers. If I had waited until August, I would have sold Palantir in the 170s, 180s. If I had waited until maybe September, I would have made more money. But this is the reality. You're never going to buy the bottom. You're never going to sell the top. You got to get that through your head. And 2023, I made a lot of mistakes, which cost me money. And 2024 profits got me out of the hole because I changed my entire philosophy in 2024. My philosophy went from, I got to nail the bottom. I got to nail the top. Come on, I got to do it. Can you get lucky and nail the bottom? Yeah, you actually really can. But what is the probability that you get lucky and nail the top when you nail the bottom? That probability goes down tremendously, okay? Buying the entire V, the crash, whatever you want to call this, massive correction or whatever, you're going to make money, especially when you have great management teams. Now, I'm going to look at these positions here for the last 3 months, and I got them on compare. So in the last 3 months, Meta has gone down by 4.55%. JPM I also have up here too, which is very valuable because it is very so when JPM is having some struggles, SoFi is definitely going to get hit, but at the same time, it could definitely signal that the entire market might be having some issues. And banks are deemed to kind of really be like a safe haven, or a lot of people really thought before the great financial crisis that banks were a safe haven. Now a lot of people are now it's like Apple and Walmart is very much like this safe haven. JPM is down 8.65% in the last 3 months. Then we got AMD down 12.37. Palantir has recovered significantly in the last weeks, I should say, 13.78. Adobe, SaaS has definitely recovered a little bit too, 18.61. SoFi has actually sold off even more, down 32.79%. And Hood is taking the lead on the down of 43.12% here on 3 months. Let's go to 1 month now, okay? Now, 1 month shows a little bit, somewhat of a recovery for some of these positions happening. We got Palantir, whopping 17% recovery. You got Adobe, almost 5%. Hood, 2%. AMD, still negative 133. Meta is down 4. SoFi's down 5. JPM's down 6. JPM definitely got hit hard this week, especially everything in the Middle East. So these stocks, SaaS, software, semis, I could definitely throw NVIDIA on here at the same time too. And then the banking sector for SoFi. And then you go ahead and throw in Meta, because Meta is definitely with Amazon and Google with CapEx spending that is leading a lot of people to fear right now and starting this whole sell-off of software. Hold on. Just chugged my peppermint tea. Okay. So a lot of people on social media are really talking about, hey, is this the time to really start going all in? Because going all in a newbie terminology really means, hey, it's a one-click transaction. You got to nail the bottom, right? You got to go all in. You got to nail the bottom. I don't believe that, and I don't agree with that. I'm also not a FA. I've had tremendous luck in the market. And I've also listened to so many other billionaires, and their philosophy is very similar. You buy the entire way down and the entire way up, okay? Clicking a one-time buy may not necessarily work out. Now, obviously, if you're going to be a smart ass and say, well, I just did a one-time buy on SoFi right now, I'm up on shares, you've probably been buying SoFi like me in the last couple months, right? So it's really, a trick question for some people. But the thing about it is that we're seeing a little bit of recovery, especially around all these beaten down stocks. And the stocks that I'm covering right now are the stocks that I'm really talking about potentially going all in mentality. So I'm going to really go ahead and say what I'm personally doing. And for anyone new here, like I said, tremendous welcome. I'm doing a public account challenge for motivation and for education as well too. The account challenge started on January 2nd of this year, and it's going to 17 months, taking this amount of moolah to 6 figures. And the stocks that I've been buying, honestly, SoFi is the only stock on here that I've owned since Liberation Day. But I was buying a very much chunk of these positions all before Thanksgiving, right around October, pushed down, and I started nibbling on in. If you've been following this channel for the last couple months, you've been seeing my buys, and I've been purchasing a lot of stock. Sometimes in $1,000, maybe $2,000 transaction, sometime a couple $100. But the whole point is that I'm nibbling on in, and I'm picking up discounted shares, and I'm buying this entire way down. Now, something about the account challenge, though, is that every month I'm injecting $500 into this account, And I've already done January, February, and friggin' March. However, if this market is going to show some more volatility, I'm seriously considering doing the remainder of 14. I got to double check myself. That's $7,000 in front loading that into this account. That would theoretically mean that this account, this public account challenge, is all in. Because if I transfer over $7,000, that means that, hey, this account is all in theoretically. Now, am I going to be spending that $7,000 on stocks and buying stocks? Not all at once. If we're going to be recovering in SoFi, AMD, Palantir, Hood, Meta, Adobe, PayPal is in its own separate world. I honestly was going to upload a video today talking about PayPal. But I got to spend probably, I got to wait maybe on Monday if the market's kind of chill, maybe make a dedicated PayPal video. Because honestly, there might be some good stuff coming for there. But essentially, what stocks on my profile would I consider actually utilizing that $7,000 for? Believe it or not, SoFi is going to be a big buy in the sense of probably maybe over $1,000 worth of shares. And the reason being is because my total cost I'm looking is definitely lower than AMD. On my private account, it's honestly the other way around. SoFi is my largest position on my private profile. AMD is actually my second front runner. And I do get asked this fairly often. Do I own the same stocks on my private account? The answer is yes, just in obviously bigger dollar amounts. And I do have a few other more riskier plays that I'm kind of trading that I kind of really don't want to kind of really put necessarily just yet onto YouTube. Here to really, because I'm very much a investor in investing stocks, but at the same time, I'm very much a trader in trading stocks. I like to generate money in the stock market as well as investments. But I really want this YouTube channel to be very much dedicated to building wealth, which I'm a very big advocate for, keeping yourself motivated, keeping yourself focused. If you need to be fully sober like me, sobriety is great, then it's not a bad thing. And building wealth over time by investing into great, phenomenal companies. Very much later, when probably things become a little less volatile, I may change and put on kind of a trading hat per se, right? But I'm very much an investor hat right now. However, SoFi, I would definitely increase my position here, my total cost, and that may very well make the market value of SoFi go greater than AMD. A couple months ago, ironically, SoFi was up over 100% on this profile. I didn't lose my head when SoFi was going down. I just bought more shares because I'm a well-rounded investor, and they triple beat on the best earnings ever. And they sold off, and I bought more shares. I don't care that I was up over 100% a couple months ago. It's going to go back up there eventually. But AMD, I own a lot of AMD across my profiles. And the thing about the semis is that SoFi is going up and to the right. SoFi is really proving themselves. Now, the thing about AMD is that people are very much expecting them, including me. Do I believe that AMD will? I do. But the numbers that we are projecting are just all over the place. Some people are projecting that AMD could be producing NVIDIA-style growth, which is very unrealistical in my opinion. Some people are saying it's going to be even more bullish than what Lisa Su has said, a 30% growth rate for the year. I honestly believe that. That's my really bull case. Some people just want to do a base case on what Lisa Su is saying, even though she typically sandbags like every CEO out there. And some people are saying, hey, there's a bear case, but even the bear case, you're still making money on AMD. So AMD, in my opinion, is very much, it's not a gamble, but it's a very less calculated gamble. So I would probably feel comfortable holding off on AMD, but the reason I would be increasing my SoFi position is because of this. In the last 3 months, SoFi is down 32.79%, and the CEO himself just bought $1 million worth of shares. I feel confident. I would feel confident taking another $1,000 in buying of SoFi shares. What is another company that I would feel confident buying another $1,000? Honestly, probably maybe $1,500 worth of shares. Hood. Why? Because they're traveling with Bitcoin. You think that Bitcoin is going to be down forever? No, okay? Bitcoin is not theoretically, and this is the whole debate by Bitcoin. Whenever I say this, I always get pushback from the cryptocurrency bulls. Here's the thing. If I do theoretically go all in on this profile, I may pick up some exposure to crypto. Obviously, I'm not buying friggin' Bitcoin, but I may buy something else. So, I would feel comfortable increasing my hood position drastically, well over $6,000, and I've talked about this, even maybe closer to $7,000. And then on the sidelines of the money that I would be transferring over and potentially going all in on this profile, I would have some exposure to crypto. I would actually buy a cryptocurrency position. I have owned crypto before. I tend to just very much dabble in growth companies. That's very much my thing. And also value companies as well, too. I'm a very big believer in as well. And if you want to even do some dividend stocks, I mean, hell, Meta produces a dividend. PayPal produces a dividend. Theoretically, I'm in a dividend stock over here, right? But at that point, if I went all in on this profile, I would pick up more SoFi. I would pick up more hood. I would expose myself to crypto with a crypto position. I don't want to say what position. That would definitely take some chips off the table of that $7,000 coming into this account. I would, and this might be a shocker, I would increase my Adobe position well over 1,000. So probably buy 6 shares of Adobe. Nightmare. Adobe was down on your profile by over 15% like a little over a week ago. Why would you do this? Because you buy on the way down and you buy on the way up. Adobe's party is not here yet. Just because SaaS has recovered a little bit, there's going to be the time where the big dogs in the market are going to come back into Adobe. Okay, they're going to come back in to all the SaaS. They're going to get their heads out of their bum hole and stop being scared little wiener dogs, or maybe they're doing it on purpose. And last but not least, what else would I potentially do? Honestly, at that point, I probably just would have the remainder cash in this profile just in case I do need to be buying some more dips, because it's always good to have a couple thousand, couple percent, especially in an account, just in case another massive drawdown happens. But yeah, I mean, theoretically, if next week is really a Debbie Downer, if we go ahead and reverse next week, I'm really leaning to going all in on this profile. It's going to be great for education, like I said. Once again, I'm not an FA, so please do your own research. And if you could do me a favor to wrap up this video, smash the like button if you made it this far and enjoyed my content for today. New video on Monday. Be safe, everyone. Do your due diligence. Do your research. But yeah, it's a very, very easy, simple terminology that I believe and preach. And good vibes all around. Later, everyone.